Another potential bump in the road on the way to an IPO for co-working space giant WeWork. Leslie Picker is here, and she's got more on the story. Hi, Leslie.
Hey, Becky. WeWork's advisors are becoming increasingly concerned that this deal isn't going to happen. That's according to sources I spoke with over the weekend. They're having a hard time finding investor demand at a valuation the company deems reasonable. I spoke with some typical IPO investors as well, trying to find someone who was interested in buying or someone who knew someone who was interested in buying. Most said the corporate governance and managerial risks were just too much to stomach, regardless of the price. That's the dynamic that's causing bankers to think below that $20 billion valuation that they've been testing with select market participants. Now, plans for a roadshow launch are still very much in flux as a result. I'm told there was a call/meeting yesterday, but still nothing was decided. WeWork still hasn't even picked an exchange where to list its shares, which is oftentimes a prerequisite to making plans for its debut. So, guys, the longer this drags on, the more difficult it will be for WeWork to actually complete an offering, which could mean foregoing billions of dollars in equity and an additional $6 billion through a concurrent credit facility.
Okay, so I have two questions. One is, given that they were planning to raise funds as part of this IPO, how much time, if you just look at a calendar, do they have in terms of their run rate before they need more money?
Well, that's the tricky thing, too, because also the calendar is difficult for this company, because if you don't go out in the next couple weeks or so, then you run up against the Jewish holidays. They're losing about $1.5 billion in operating losses a year. So I think they have 2 or so years before they run out of money. Don't quote me on that because I can't remember the exact.
Okay, so there's time. There's not a crunch in the next 6 months for them.
No, and there's also the idea that's been floated about, which is that SoftBank could come in and contribute more. I don't think they can necessarily just punt this IPO and not have any.
That was the next question, though. What
void.
is the thinking inside SoftBank? Because we were talking about the fact that SoftBank just raised a second fund on the back of a heightened valuation for WeWork, which is no longer the case.
Well, we see this oftentimes where you have an investor in one of these unicorns, and then they come in subsequent series to help keep that valuation higher. SoftBank could theoretically do that, come in and continue investing at a higher valuation than they might get in an IPO, so not to have to mark down the value of their investments. That's a possibility. But most of the SoftBank investment, they did invest at the $47 billion range, but they also invested at something in the 20s.
Right.
So their exposure to various,
it's
a blended rate. Their exposure to various valuations is a little bit more complicated than that. So it's unclear if they did contribute more capital, would they do so at that $47 billion? I mean, no one's even talking about $47 billion anymore.
Tell me something. What were they thinking of, given the leadership's practices and judgment of going with an IPO in the first place? And secondly, can the CEO survive this?
It's a good question. So they have a triple class share structure. So theoretically, if the CEO wants to survive this, he can survive this, even if they go public, because he does maintain outsized control through that triple class share structure. Interestingly, you bring up some of these corporate governance risks, which they came out with their first filing, and they said, little things like $5.9 million that was awarded to the CEO for changing the name of the company, essentially. They didn't have trademarking the We company versus WeWork. Also, they didn't have any women on the board. Subsequently, in the last week or so, they have kind of backtracked on those things to try and clean up some of the corporate governance, but they still have that triple class share structure. They still have about 12 pages of conflicts of interest that they have laid out and related party transactions that they've laid out in their prospectus. So there is a lot of work to be done if they do really want to make this a very clean shot with regard to corporate governance.